The expectations of tariffs rising, particularly on EVs, maybe fourfold next week, considering our deteriorating economic relationship with China. Is this the worst timed IPO of all time?
Yes, if you think about timing, we at Zeekr never try to time the market or chase the latest trends. I mean, we follow our own strategies. If you think about overall, say for example, overall Chinese EV market, if you read the numbers in the first half of April, in China, the passenger vehicle market records a new energy vehicle penetration rate of more than 50%. If you look at my pipeline, I've introduced my own new 111 in February this year, and earlier this year, in 1st of January, started delivering my own new 77. So my pipeline is also very strong. And if you think about my international expansion strategy, we've been starting selling cars to international markets since last October, and in this year we're going to sell more cars. So we need this kind of transparency brought by a U.S. listing. All in all, we do think it's a good time. We're not considering about short-time headwinds. We think in long term and trying to make sure that in the long run we make a very, very good business case.
Well, sir, as you talk about how you're expanding to international markets, considering the existing tariffs in place in the United States, the country in which, as of today, you are now listed, and potential that tariffs go even higher, are you now listed in a market that you may never actually be able to enter and be competitive in because of those tariffs?
Yeah, so we are not entering this market, or we are not just listed in the U.S. because we want to enter into U.S. market. We get listed in the U.S. as mentioned earlier. We're thinking about all the transparencies being the U.S. listed public company, or all those securities that I receive, and the comfortable I can provide to global regulators that I am a transparent and basically very good global corporate citizen. We think that is actually more important.
Mr. Yuan, the reality check seems to come in your prospectus here, as Zeekr warns investors that the Chinese government could, in fact, intervene in its business to further its own regulatory, political, and societal goals. Sir, why would a U.S. citizen ever invest in a Chinese company right now?
Yeah, so I was thinking about, if you look at the U.S. capital market, it's continued to be a very big, transparent, and probably the most liquid capital market in this world. So being a foreign issuer, we want to see if we can tap this type of markets, and we want to see, we have access to capital at time of need. Again, it's more about my strategy, it's more about long-term view rather than short-term headwinds.
Well, when we consider that long-term view, something we consistently hear warned about by the U.S. administration, including, say, the Treasury Secretary Janet Yellen, is industrial overcapacity in China, that potentially there's going to be too much supply, not enough demand. In your domestic market, with the rapid production we are seeing of electric vehicles, is there going to be adequate demand for you? What is your view on that situation?
Yeah, so that is something which actually differentiates us from most of my competitors. If you look at my business model, I actually do contract manufacturing, and my contract manufacturer partner is Geely Group. If you look at Geely Group as a whole, we produced 2.8 million cars last year globally. And those production capacities, currently, obviously, most of them are gasoline-powered vehicles, but in the future, it's going to transfer into new energy vehicles, especially EVs. And we are leveraging on that. We are taking that right. That's why, we do think this kind of contract manufacturing arrangement actually helps us to solve these overcapacity issues if, any of the regulators have any concern.